And it reminds me of like 2010 when a lot of people were still skeptical, scared, and we helped 4 or 5 families buy like 10 properties at a time. And then you look at what they did over the last 13, 14 years now. They have created from those properties, they've basically retired just by buying 10 properties when everyone else was running away or too scared to get back in.
So Mike, what are your predictions for real estate in 2024? Like, what are your thoughts for a newbie like me who's thinking about getting into real estate investing, and what should I know about the upcoming year?
I think it's going to be a great year for new investors and even some of the people who don't have a lot of properties that they're still holding on to and they're trying to sell. There's a whole group of people who have inventory that they're just not flipping, they're not selling. Newbies coming into this, there is no better time to be into real estate investing. There's more deals coming on. We see more and more foreclosures. The debt is overwhelming to some people, so they're just giving up their properties. That's what we see in 2024. Not like 20 or 30%, but maybe even 5 or 10% more homes available for investors. The other side of that is we are seeing more and more investors leave this community. So less investors, more properties means there's going to be better deals for the people who are sticking around.
Okay, so as more investors leave, that means there's more opportunity for newbies like me, but part of me feels skeptical, right? Like, so if they're leaving, what makes me think I can go in and take over the reins and take over where they left off? Why should I jump in? Why should newbies look at, becoming real estate investors?
Number one, I think in the first time in a long time, there are better deals, meaning there are better margins on deals. There's more meat on the bone, let's say, for the properties that are coming up. So you're going to find deals that are in 70 or 65% LTVs. Or just a couple of years ago, we saw people buying at 80 and 85% LTVs. That means there was less available for profits, for them to make money. So as a newbie, I'm not going to say there's less risk, because there's always risk, but there's going to be more opportunities for you to succeed than there probably was even 2 years ago. Because when there's too many people bidding on few properties, people get a little crazy, a little overzealous, and start bidding up properties and making them less profitable for anybody. They typically lose money. So you want some of those people to leave. You want some of the people who don't understand what they're doing, who probably made some bad choices and got stuck with some properties. Like real estate investing is like anything else. Not everyone was successful every time. A lot of people are, and a lot of people make a lot of money. In this environment, what we're seeing, since there's going to be less people and the people who are probably going to stick around are the people who know what they're doing, the competition is just going to be better for you as a new investor to find good deals. Now, probably the biggest hurdle you're going to face is finding money. For the last 10 years, all the real estate investors coming in, there was big pools of money and they're just throwing money at you, and rates kept going down, all these things. It's going to take a little bit more for you to prepare to be ready for this than it has in the past. And that's another good thing, because it's another barrier of entry that is required to get into this. So if you're a new investor and you can get into this, this is where you're going to create the wealth you want, the income you want in real estate, in the markets that you're supposed to be buying. You're supposed to be buying when everyone else is leaving.
Makes sense, right? It's better to be a big or medium-sized fish in a smaller pond than it is to this giant pond. It reminds me of when my wife and I were trying to buy a house a couple of years ago. We never ended up doing that because every house we put an offer on, someone ended up getting it that like went 100 over asking or something outrageous like that. And that sounds very similar with investors, right?
Yep.
People can just, when there's a lot of people, it's way harder. And so this way we might have to do more work on the front end, make sure we have the money, which is going to be harder than it would have been. But it's going to be easier if you do your homework to actually land the deals, is what I'm hearing.
If you're prepared, there's going to be more deals. There are going to be more profitable deals in this kind of market than in a market where everyone is allowed to get in and invest and try to buy properties. Because it's like you said, it's no different than you buying as a homeowner. Everyone's driving up the price. Less people bidding on properties. There's going to be properties available for the people who are ready. And it reminds me of like 2010 when a lot of people were still skeptical, scared. And we helped 4 or 5 families buy like 10 properties at a time. And then you look at what they did over the last 13, 14 years now. They have created from those properties, they've basically retired just by buying 10 properties when everyone else was running away or too scared to get back in. So you have to be able to jump in when other people are getting out. And you have to have a little bit of confidence that that's always how markets worked. Because you're going to hear the fear in the streets and you hear people wanting to get out. And that's when you want to buy. You want to start buying when people are fearful and running and getting out. And that creates uneasiness, but that's what it is. We've been doing this almost 24 years now. That's where we see the biggest jumps that people take is in years like this.
Yeah, that makes sense. I see corollaries in just investing in general, right? Like I had friends that were really trying to get me to invest in Bitcoin when it was at its height, right?
Yeah.
And so now they put money in and they're it's lower than what they put in because most people got in on something like that when it was really popular. So same with real estate is what it sounds like.
Well, it's the same as any kind of, like when it's so hyped and everyone knows and everyone's running towards it and you can never lose money. That's typically when it's at its height. And that's where you need to get out. And all those people who invested like in Bitcoin and some of those other things, they're wishing they probably hadn't. And just like real estate's going to go to kind of the back burner for people. Less people focus on it. That means the people who are focused on it will have the biggest upside.
Is it worth it for people to go ahead and get into real estate right now, even though the interest rates are higher, right? Is it worth it to pay those higher interest rates on your monthly payments in order, because it's likely going to keep going up after a while because nobody's doing it right now?
Yeah, I think a couple things when you're looking at getting into this market, especially new people, since interest rates are so high, you should probably focus on the lower end of the market. So markets that have more homes in the 300,000 and below than the 500,000 to $1 million, because affordability is going to be a factor if you're flipping, because someone has to be able to afford and buy that house. We have a very good inventory shortage for us as investors out there. There's still a huge amount of homes. I think at the beginning of the year, Realtor.com had a stat that 4 million units need to be built just to hit the current demand. And there's growing demand because there's less homes being sold. So there's still people out there looking. So if you're in a good price point and you have a good product, it's going to sell. Number two is, especially since you're fixing up properties and you have a nice fixed up property on this market and you're competing against people who are trying to sell and not fixing them up, you're more likely to sell. Interest rates will be a factor. If you can find rental properties that at least break even or make a little bit of money in this market with the higher interest rates, when interest rates come down, who knows what that'll be? The Fed keeps messing with things. It could be 18 months, it could be 2 years from now. But when they go back down and you're able to refinance, your cash flow is going to go way up again. And guess what happens when interest rates go down? More people jump back into the market. So there's a lot of people right now sitting on the sideline, not going to buy that first house, not going to move up or do anything else like that because interest rates are just too high. People get used to seeing, 8s and 9s and interest rates out there, and then they come down to 5s. People are going to jump back into the market. So somewhere down the line, 18 months, 2 years from now, when interest rates go back down, or hopefully sooner, you know what that means? If you're buying now, more people flooding the market. Typically, when more people come in, home prices go up, or anything goes up. Any kind of product goes up when there's a bunch of people wanting that product. So that's what's going to happen. So if you could buy now and you can at least break even, when you go to refinance, your property is going to be worth more because there's more people coming in. This is typically how markets work. There's less people out there now, so home prices will come down. When rates come down, more affordability, people jump back in, millions of people coming, hundreds of thousands of people coming back in. Home prices are going to go up. You own a rental property, it's breaking even. You get to refinance into a lower interest rate in the coming years. That's going to increase your cash flow. The value is going to go up, so you're creating more wealth for your future you too. And rents are going to keep going up. At least in most markets, rents, cost of living are going to go up. You have a fixed number on your mortgage right now. If you just refinance it and it keeps going down, you refinance it in a couple of years, your balance stays the same, but rents are going to go up. Just get a lower interest rate and your value goes up. You've created wealth and more income. So it is a great time to jump in, because if you could buy something low and make it work now, when rates go back down, you're creating that income and that wealth by taking that jump right now. This is the time for all of those people who are doing this to jump in and look at it, but do it correctly.
Yeah, it makes sense that the budgeting and cash flowing would be of prime importance, because it's exactly the thing that people don't want to do, which is worry about higher interest rates or worry about more of a monthly payment. But at the end of the day, like when I'm thinking about the math, if a few years ago when people were going 100K to 200K over asking was insanity, that's so much more money. Even though interest rate's a lot of money, people think that they're, being smart by avoiding the higher interest rates, but it's smarter to avoid, the prices being 200 more than they are now. Is what I'm kind of hearing. Is that right?
Well, yeah, just look at if you buy a property right now, let's just throw some numbers out there. You buy a property that you get for $200,000. And in this market, it's only worth $250,000, right?
Okay.
And then let's just take the opposite approach. Someone who bought that property 2 or 3 years ago and paid an extra $100,000. And maybe you could buy it for $250 now, and they bought it for $300 or $350 because they overpaid for it, right?
Yeah.
So right now they're upside down. You as a new buyer coming in, I'm buying it at a good number because the markets have come down. 2 years from now, let's say both of these properties go up to 3.25 or 350. They're just back to zero equity. You have just created some equity. Your loan is smaller. You're going to pay it off, but your values are the same because you bought lower. Your costs are still there. Their mortgage could be $300 or $350, and yours is maybe, $250. I mean, like,
Right.
over time, you're going to win that game by buying at the right time.
That's so interesting because, like, I hear people saying, stay out of the market right now.
Yeah.
But that conventional wisdom is not really very wise. That's what I'm hearing. In terms of if you're willing to do the work, it's not wise. Maybe it is wise if you're not willing to do the work and do your numbers up front. But if you know that you cash flow, it sounds like getting in while everybody's running away is the right way to go.
Buying good markets, buy good properties. When I say good properties, don't buy stuff on corners where they're busy or busy streets. In these times, buy good properties on cul-de-sacs near parks. Buy what you can in growing markets. There's markets where the cities do better than the suburbs. There's other places where suburbs do better than they're growing at a faster rate. So buy where you know that people still will want to go in your community and grow with it. Like I said, I remember the Greens and some of these people back in 2010 who were buying just because they're like, we've gone through this before. They were a little older than I was at that time. And they're like, we've gone through this before. We know when this time comes, you buy. Because the conventional wisdom out there is credit card debt is at the highest. This is at the high. All of the negative out there keeps more people out of the market. That just means less people trying to buy a property.
Yeah.
So the people who are trying to sell it have to work with you a little bit more. There has to be some better deals. We are seeing better deals, not all the time, but a lot better deals now than we've seen, over the last couple of years, because more and more people have that fear and they're just like, I just want to get rid of it before anything else gets worse. I just inherited this. I just want to get rid of it. So as long as the sellers have that fear and they hear it in the market, the people who are level-headed, buying right, they're going to do really well. Part of this whole thing about 2024 too is just understanding, because there's been a whole generation of real estate investors and investors who have gone through some really good times with money, meaning banks, lenders, fintech, they're all out there. Everyone is trying to give you more money. And what the Fed has done is said, we're going to slow that down. So this huge pool just got a lot smaller. There's going to be less people who qualify to use other people's money, banks' money. There's going to be less people qualified in this market than in other markets too. Part of why some real estate investors are probably moving out is they may not have the credit, the income or whatever to even get a loan in this new market. Coming in as an investor in this market, you have to make sure you're set up to qualify, because since this pool is smaller, this amount of money out there is smaller, you're going to have to stand out more to the lenders. You're going to have more money in. You're going to have to work as we call your buckets of money. What do you bring to the table when you're talking to someone who's going to give you money to invest? Because real estate investing is all about using other people's money to create wealth with a little bit of yours or none of yours. So
that makes sense.
There's going to be less real estate investors out there. There's going to be less money out there, but there's going to be more deals. The percentage of more deals, we'll see what happens. There's going to be areas where foreclosures are higher than others, but there's still going to be more deals. That's what we see in 2024 than we have in the last 5 or 6 years. More deals with better margins.
More deals with better margins for 2024. Okay. That sounds like a good call for a newbie to be involved, to get into this in the first place. But with the caveat of be willing to, to do your numbers, to make sure you cash flow, and to be like, what do you often say? Represent yourself as a real business, be willing to, do all those things. Because the competition is less, they can be a little choosier in some ways.
Yeah, and it's like set yourself up. I mean, like you can't start today and be a really good investor tomorrow. There's some things you have to learn, understand. Like number one, where do these properties come from? Who are the lenders? How do I calculate ARV? You have to put some time in up front, and that's why it's great now. Like if you start now, put in this time. Like we have this thing we call the 90-day challenge. It's all about look at a cube. Like my son does 5th grade math and they have a lot of cubes out there that have all the 100 blocks by 100 blocks. So if you look at it and you're starting out, I would start out with 3 cubes of finding properties. Who are the wholesalers? Who are the realtors? Who are the bird dogs? Whoever who could find me properties that are undervalued that people want to get rid of. 3 more cubes maybe. I want to find the bankers, the hard money people, or the OPM who are going to give me the money to buy those properties. Another cube might be, how do I calculate? This is all about buying good properties under market. But how do I know it's under market unless you know how to do that? So practice figuring out ARV. It's not about the time you put in, it's just about the number of times you actually run through an ARV. So you might have to run through 10 or 20 times. But once you understand that, everything else gets easier. Just like you said, one of the other rows would be setting up your business correctly. So some of these lenders, and like most of them need LLC set up. They won't lend unless it's an LLC. Finding some money to get your business going. There's certain things that you could do that are easy to do if you just put your mind to it. And it's just a matter of finding good properties, finding the money, and how to evaluate. If you're flipping, you probably want contractors who you know. So like, how do you set this up? How do you know exactly how to do it? And that's something as a newbie that I would start now, just not jump into it and go like, okay, because you may have to look at 10 properties, you may have to look at 50 properties to find a really good deal. How do you look at 50 properties quickly? Or how do you find the person who's going to bring you good properties at good values so you don't have to spend all that time? This is a 6-figure business, easy, done right. It's even a 7-figure for a lot of people. You have to put in the exercises to find these people, to do it right, to figure these things out, and you'll be set for 2024.
This 90-day challenge that is about getting set up right, if I'm understanding, is that on your website?
Yeah, it's just something that, like we said, how do you make this simple in someone's mind to figure out, like, what do I do next? How do you start? Where are you?
Right,
Maybe
yeah.
one of those things is my credit's not there. So how do you work on credit over the next 90 days or whatever to make sure that's in line? But the biggest things are finding good properties and finding the money to buy them and figuring out ARV. How do people value stuff correctly so you're not getting into a bad deal? Because the truth is there's a lot of wholesalers, there's a lot of realtors out there who are maybe going to inflate some of the things that they're going to try to sell you, like, hey, it's going to be worth this and it's only going to cost you less to fix up than when you go in and look at it. So understand what you're going to do. But the good thing is you only have to buy 3 to 5 properties a year to really make a change in your life. You could buy 5 properties under value, and in 10 years, they could be worth double, triple that, and you could have millions of dollars in net worth created when the average person for retirement maybe has, I think in the U.S. is like 60-some thousand. I mean, it does take a little bit of time. This thing that we're setting up, it's just like, how does someone coming into it have some detail, like, what do I need to do? Okay, you need to go find 10 realtors. You need to go find 10 wholesalers or bird dogs or whatever. Okay, how do I do that? What does it look like? What bankers? All of these things. Because you have to find more up front. Because until you find that realtor that actually sends you a good deal or that wholesaler, it takes some work to get there. Like I said, we're creating a 6-figure easy business. To do that, it's going to take a little effort on your side too.
And to kind of, I don't know, have the pulse on like how to figure out if it's a good deal or if it's not. Is that something you do consulting work in? Like people can call and ask about how to find a good deal?
I think finding the good deal all comes down to figuring out what it's going to be worth in this market and working and understanding yourself. A good investor after so long, and we say it's not time, but it's attempts or tries. Like, how many times have I valued a property? So you can look at something really fast before you have to dive in and probably get rid of 70 to 80% of the property. So yes, this is something that's learned, and it's learned by doing some simple things over and over. And yes, we can help people with that because that is vital, not only for them, but for the lenders out there who are lending on it, because they want to make sure the values are true to the current markets. That's where you make your money. You want to find something that is truly worth more than what you're putting into it. And some of the people may lead you astray on what, if you're not willing to put in the work and at least figure it out. Some of the people selling your properties may make you believe that it's worth a lot more.
That makes sense.
Us helping people, that's what we're here for. We think 2024 is going to be a year, and maybe even 2025, where people who want to get into real estate investing can create that wealth. But they have to be what we call the doers, the people who are going to come in, understand and learn, and reach out to the people who are finding the properties, who are lending on their properties, and help with figuring out to make sure that it's a good deal up front. And yes, lenders, just like us, help people make sure that the numbers make sense. But they should learn that too up front so they can evaluate deals a lot faster, even before it gets to the lender. Because if we're getting 100 deals a day, people sending us saying, hey, is this a good deal? Is this a good deal? It's like, we can't do all that. Sooner or later, we have to have them at least, and we could go back and say, well, here's why we think it's a good deal, or here's why it may not be a great deal compared to what you're looking at. But yeah, we can help.
So anything else about 2024 that we need to know?
Just to recap, there's going to be more deals with more profits built into them. Real estate investing, they always say you make your profits on the buy. If you buy it right, a lot of things could go wrong and you still make some money. So there's going to be more deals. They're going to have better profit margins. There's going to be less qualified competitors in this market. Not only the regular real estate investors, but a lot of the hedge funds have still stayed out of buying properties. So there's a lot less competition there. So you have more properties with better margins and less competition, and understanding that there's going to be a smaller pool of funds, and the Fed's going to keep tightening that as far as they could tighten it without bursting the economy. So it's going to be a great opportunity for the people who are serious about this and who want to put some effort in to create some wealth.
It's awesome. And where can people go to learn more on how to do that?
You can go to our site, thecashflowcompany.com. There's a lot of great free downloads, information there. If you want to schedule a call, you could even do it from the website.
Fantastic. All right. Thanks, Mike.
Thanks.
It's been
Thanks,
good.
Michael. Yep.